maybe. But, really to your point, since the US dollar is the world reserve currency, which is not really true anymore, but it's still referred to as that, that gives the Fed a lot of power. And because so many countries around the world are tethered to the dollar in one way or another, some countries are even using the dollar instead of their currency because their currency is hyperinflated away and lost all the confidence. What's going to end up happening is those that have chosen to adopt the dollar, including U.S. citizens, are going to be quite shocked as the dollar's demise.
Gold rises despite Fed caution on rate hikes. On Thursday, Governor Christopher Waller said that he was in no rush to cut rates. He also said that January's figures may have been driven by one-time quirks. Many companies raised prices at the start of the year. Or they may suggest inflation is stickier than we thought. We just don't know yet. Fed official Patrick Harker, president of the Federal Reserve Bank of Philadelphia, also expressed caution about cutting rates too soon. Gold stocks struggled at the start of the year, performing worse than the metal itself. This was likely due to disappointing operating results and guidance for the sector. Sentiment towards gold stocks has been poor, leading to overselling after any negative news. For example, Barrick Gold saw a drop in its share price despite analysts maintaining their targets. While companies must provide accurate guidance, it seems that negative sentiment towards the gold sector is exacerbating market reactions. Now, we'll show you more clips of Michael Oliver. Before, check our pinned comment for some massive sign-up bonuses if you want to add crypto to your commodities portfolio. Enjoy the video.
Blooms. Now, let me just say this. They know how to do this. They know how to make the transition from one currency to another currency and make it as invisibly as possible. To your point, I was there in 1971 when President Nixon handed over control of inflation to central banks, because that's really what happened when he took us off the gold standard temporarily, which of course we're still off, because what do bankers know? They know debt and they know interest rates. And so what tool in a debt-based system, how do you justify or how do you grow the money base? Well, you loan it into existence. And every time the Federal Reserve does that, the money, or any central bank, is not just the U.S., but the money that's already out there loses value. That's called inflation. And there are advantages to inflation for governments because they get to tax you without going through legislation. So therefore keeping it almost invisible. And then for corporations, even though nominally, so numerically, it seems like they're paying you more and more, that dollar out there buys you less and less, so that in 1971, with an average wage of $9,500, a family of four needed one wage earner. Today, you're $150,000 a year and you're paycheck to paycheck, even at $250,000 a year. And they stimulated anybody under $150,000. So what that really tells you is how much value the dollar has lost. Even look at the stock market with these $1 trillion and $2 trillion and $3 trillion companies. Is it really that company is worth that much money? Or is it that, well, for one thing, all central banks have a gold revaluation account that they use, or that people have heard is that, well, there's not enough gold to back a currency. Well, that's simply not true. All they have to do is what they always do, which is revalue the gold, suppress it while it supports their efforts, so individuals stay away from it. But then when all confidence is lost, then all they have to do is revalue it. So that is the whole point of gold, that there is a finite amount, and it has the broadest base of functionality since it's used in every single sector of the global economy, barring none. And so it actually makes it pretty simple. But talking about China just a little bit more, China enabled and encouraged their citizens to start to accumulate gold, but hold it inside of their banking system. So what do they really have access to? Because if anybody thinks that the Chinese government wouldn't take public gold for their benefit, they need to think again. And what they know, what many countries know, since we've seen central banks buy the most gold that they ever have since they started recording it historically, is they're quite clear that this is the end of, whether you're the euro, the yen, or anything else, this is the end of this debt-based system. But in order to go into the new system, which if they have their druthers is a full surveillance CBDC, that is not my druther, but in order to do that, something I've had a really hard time finding, so I don't know that they've fully defined it yet, is in the current system, money's created from debt. What's going to justify creating the new money in the new system? I've seen them discuss debt, which means they got to wipe out through hyperinflation. They're all defaulting. I don't care what country you're looking at. They have no choice. They have to get rid of the debt. And the way that developed nations do that is through hyperinflation. So whoever's holding those debt instruments or, stocks, bonds, things that can only be annuities, things that can only be converted into this, when it loses all purchasing power, look at Zimbabwe. You could be a billionaire and not be able to buy 3 eggs, right? It's hard for people to wrap their brain around because what they like to do is just keep the same name. So a lot of people think nothing has changed when in reality, everything has changed. But at the end of the day, because of its many uses, not only is the broadest functionality, but it has the broadest base of buyer. That's why it's never gone to zero.
In an economic landscape rife with uncertainty and the dollar's diminishing purchasing power due to relentless inflation, Lynette Zang's insights shine a spotlight on gold's unparalleled stability. This precious metal, unique for its immunity to counterparty risk, becomes an essential asset for those aiming to shield their wealth in an era of market volatility. As we dissect the impacts of central banks' unending monetary expansion, Zang underscores the importance of incorporating gold and silver into a diversified portfolio. This approach, far from being merely a hedge, is a critical component of safeguarding financial well-being. For investors at all levels, Zang advocates for informed decision-making, deeply rooted in a comprehensive understanding of global economic dynamics. By embracing strategies that emphasize sound money principles, individuals can fortify their financial futures against the backdrop of the current economic tumult. Now we'll show you more clips of Zang, but first, subscribe and turn on notifications and check our pinned comment for some massive sign-up bonuses. Enjoy the video.
Hey, look at what's happened. Look at what's happened since, let's say, September of 2019. And then if you go back a little further, look at what happened in 2007. So this change is frankly not something that I'm waiting for. It's something that I'm watching evolve. And having studied currencies forever, you see these repeatable patterns. And these patterns tell you where we are in this trend cycle. I mean, I'm never going to get you to the exact day or moment. But, when you see the same thing that has happened, and it's happened over 4,800 times, 100% of the time, and we're doing the same thing. What they always say is this time is different, but the reality is this time is not any different. And so you really have an opportunity in the suppression to buy gold severely undervalued, and silver too. I like silver for barterability and gold for wealth preservation. There are different uses for different things, but just to stay general. At this point, there are opportunities. This is a wealth transfer mechanism. Inflation is a wealth transfer mechanism. Stock markets imploding are a wealth transfer mechanism. And, that's why since we've been on a pure debt system, That's really what's enabled the income and wealth inequality. But we can take advantage of these things that we cannot change. We can vote with our wallets, right? And have sound money outside of the system. And that presents the opportunity when they do reset the currency. Because right now you have all of these assets that are based on this up at nosebleed valuation levels. And you have gold, because a rising gold price is an indication of a failing currency. You have that severely undervalued. Well, that's going to flip-flop. So whoever then holds this gold is going to be able to retain their freedom, their choices, and their opportunities. Well, why should it only be the elite? We can do it too and take advantage of what they've set up for us.
What do you think of today's episode? Post in the comments section down below your insights. Subscribe if you have not yet done so, and watch this video right here because you'll love it. I see you on the other side.